let's talk about what he did say and what I heard him pick up on, because there was some, good news, I feel like, for the mortgage industry. Not as good as it could have been, and I'll get to that in a second. But obviously he acknowledged that there has been increased inflation readings as of late, right? We saw that with CPI, and then we don't have the PCE numbers at the time of this recording. I think they come out later this week. So, this is March 25th. And so we'll have, what that PCE looks like when this recording drops. But, let's just talk about that for a second. I was watching a pretty thorough analysis that Barry Habib did on what they're expecting the PCE number to come in at. And they're expecting it to stay flat, if not actually go down a little bit, where it's widely anticipated that PCE is going to be up. And they did a very thorough review of kind of the logic behind that, and it made very sound sense to me. So, this could be very positive for us if we see PCE come in below expectation and, not showing year over year inflation growth. But that's not what's expected by the market. And so this is going to be huge. And as you guys may remember, that is the Fed's favorite measure of inflation is PCE, which will be coming out here in a couple days. But nonetheless, he did acknowledge that there is inflation pressure. Now, he talked about it primarily probably being because of the tariff talks, and that in anticipation of some of these tariffs, we may have already seen companies raising their prices, or, some tariffs, are already in effect. Although in a pretty minor way at this point. It's really not until April 2nd where we get these reciprocal tariffs that things could get kind of crazy. And there's a lot of unknowns about what's going to happen as we get closer and closer to April 2nd. But he definitely mentioned the tariffs as probably one of the main reasons why we're seeing a little bit of inflation edge up. But the other thing they did say is that longer term, they do not expect inflation to run rampant. They did raise their expectation a little bit for where they expect inflation to be at the end of 25 and 26. But by 2027, back down towards their target 2% number. So if you look at their kind of forward-looking trajectory, I think what this implies is that any inflation that we do see because of tariffs, they're expecting to be transitory. And, I'd say that word with a little bit of tongue in cheek, because remember last time we talked about transitory inflation was during COVID, and they got that one very, very wrong, right? I mean, they said inflation was transitory. Next thing you know, we're at 9% inflation. And that came up, as you would imagine, in the Q&A afterwards. And he said, look, we're nowhere in a similar situation to that. We do expect any inflation that is due to tariffs would be transitory. And it makes sense, right? Because when you think about tariffs, it's like a one-time thing, right? Inflation, you got to remember, it's not the price of goods necessarily, right? I mean, look, all the inflation we've had over the last couple of years, it's still in effect, which is why people are like, man, grocery prices are still really high. All this stuff is really high. Yeah, inflation moderating is not going to bring down the existing price of things. It's just going to slow the increase moving forward if we get to their 2% target number. So all the previous inflation is still there, and we're still building from there. And that's something that I think a lot of people forget when you think about inflation. But if you think about how tariffs would impact inflation, it's a one-time thing. You get a 25% tariff on certain, goods or services or whatever they may be. That goes into effect, and then it's there. And then, as you move forward, you would notice that inflation during that time that it happened, but it wouldn't continue to increase because of that tariff. And I think the Fed was acknowledging that.